Hello everyone, this is Paris. Welcome to BudgetHolics. In today's video, we're going to talk about the 5 best investments for passive income. In the words of Warren Buffett, if you don't find a way to make money while you sleep, you'll work till you die. This is a core principle when trying to find passive income sources. If you're able to find the correct sources, you'll be able to either retire early or find the financial independence you're looking for to devote time in projects you love. When it comes to passive income, you have to provide some value. There's no workaround around it. And you can provide this value by either investing your time and your skills or your money. For some of these, you have to invest both, at least in the beginning. While starting a business and similar ventures are a great source of income, they won't be on this list as we're focusing towards investments that will solely provide you passive income, which means after you've invested your initial capital, whether this is money or time, you won't have to bother with them anymore. If you're interested in personal finance, investing, and wealth building, please hit the like and subscribe button as this helps me immensely with the YouTube algorithm. Without further ado, let's jump into the video. The first one is private equity. You only need to have a net worth of over $1 million and an initial investment of $250,000. This way you can find the next Tesla and Coinbase, be an early investor, and enjoy those 10 days. Since I'm guessing that most of you don't have a net worth of over $1 million, let's move to the real list. At number 5, we have peer-to-peer lending, also known as crowdfunding. Peer-to-peer lending allows us to invest in people that would otherwise not be approved by the traditional financial system. This usually takes place through a platform that also takes a percentage of the gains of the loan you give. This type of lending is associated with a high degree of risk. There is a higher chance of default, otherwise people would just have gone to a traditional bank. However, as an investor, you can adjust the amount of risk you're willing to make. There are a number of P2P platforms out there, such as Lending Club or Zupa if you're in the US, or Mintos if you're in the EU. If you're an EU resident, you can sign up to Mintos using the link down in the description. As I said, you can adjust the rate of return according to your risk appetite. Mintos, for example, has 3 template portfolios with the option of creating a customized strategy according to your expectations and the amount of risk you're willing to take. Number 4 is royalties. That's how musicians, content creators, and authors get paid. If you're a creative type and you enjoy writing, composing, or even filmmaking, you could invest your time into creating something that has real value for people and then enjoy the royalties after creating this product. A typical example is investing some time of your life to write a book. There are 2 problems with royalties. The first is that not everybody is a creative person. The second is that there's a high degree of competition, so you usually need a large brand or company to promote your product. If you feel that any of those problems are enough of a deterrent for you to stop you from writing a book or creating a song, you can still use your money to get paid royalties. Websites such as Royalty Exchange allow you to purchase the rights of music, film, or trademarks and then get paid royalties for these rights. This way you can invest in what you think will sell in the future and enjoy the royalties for the rights of this piece of art, music, or even a brand. If you own a royalty, whether you invested in it or you created it, you'll get paid anytime somebody uses it. The advantage of having royalties in your portfolio is that they're generally uncorrelated assets. In simple terms, the price of the S&P 500 has little to do with how much music people listen to. They also provide a competitive yield, and they're a good source of a stable passive income if your product has some value to the consumer. Buying the royalties of an artist's well-known song is usually more expensive because it is expected that people will listen more to songs by well-known artists and bands than other hidden gems that may lurk in the internet. The recent NFT craze is also a way for artists to monetize their work. You can own the NFT of a film or a song and get paid royalties in the same manner through the blockchain. Number 3 on the list is real estate. Real estate is generally viewed as one of the safest forms of investment. Just a clarification. When we're talking about real estate investment, we're not talking about the house you're living in. That's not an investment since it's not a revenue generating asset. However, you could convert your home into a real estate investment. You could either rent a room or part of it using AirBNB, or you could do something called house hacking, for which I'll make a video in the future. In simple terms, House hacking refers to the process of dividing your property into smaller apartments, living in one of them and renting the rest, while using the income from the other apartments that you're renting to pay for mortgages and other living costs. You can choose the degree of your involvement by either tending to the property yourself or by hiring someone to manage the property. The problem with real estate, whether you're buying an apartment to rent or whether you're getting a mortgage to buy this apartment or to renovate your property so as to house hack, is that you'll need a significant amount of early capital for a down payment. Since many of us might not have the option of this initial down payment because we're millennials and we're poor, another way to invest in real estate is through REITs, which stands for Real Estate Investment Trusts. These are large companies listed in the stock exchange that own properties across regions or across the globe, and by buying the stock of a REIT, you get paid a portion of the earnings of the company in the form of a dividend. There is a large number of REITs out there. An example is Realty Income, ticker symbol O, that owns a number of commercial properties across the United States and Europe. You can invest in REITs with as low as $1 depending on your exchange and then enjoy the profits. A positive thing is that they are required by law to distribute most of their profits as dividends, which brings us to number 2, dividend stocks. When a company makes a profit, it has several options about what to do with this money. They can either reinvest in the company in the form of R&D, buy other companies, buy back shares, or distribute a portion of those profits to shareholders. Stocks of companies that distribute their profits to shareholders are called dividend stocks, and they're one of the most popular options for passive income out there. At the beginning of each month, I make a list of the 5 dividend stocks to buy during that month, and you can find them all in this playlist, for which I leave a link here and down in the description. You can also subscribe to the channel to get notified whenever I post a new dividend stock list for the month to come. There are a lot of factors to take into consideration when choosing which dividend stocks to go for. The simplest way is to buy a dividend index fund such as VOO. However, if you want to pick your own dividend companies, a good place to start is to look at Dividend Kings and Dividend Aristocrats. Dividend Kings and Aristocrats are companies that have been increasing their dividend for 50 or 25 consecutive years accordingly. Keep in mind, I'm not a financial advisor or planner, and this video is for information purposes only. When it comes to investing, know that your capital is always at risk and always do your own research. If you need further help, seek the advice of a certified professional. Before we get to number 1, a sort of honorable mention here is paying off high interest rate debt.
But this is not an investment. Why are you talking about paying off debt?
Well, before you rush to the comment section, while paying off debt is not an investment, if you have a credit card that's charging you 18%, then this is an 18% you're losing every year. Paying off any high interest rate debt, anything that's above 5%, is the most guaranteed rate of return you can have in the investing world. At number 1, we have earning interest on or staking crypto. If you haven't invested in any crypto yet, you can sign up to Coinbase using the link down in the description and earn $10 with your first deposit of $100 or more. Coinbase also has an earn program where you can watch videos about cryptocurrencies and get paid around $1 per minute of educational content. I'm wishing universities could be like that. Crypto is generally viewed as a growth investment, meaning that you buy something and hold it for the long run. Unless, of course, you're a day trader and you're daily trading cryptos, sorting them, and so on. However, you can earn interest on your available crypto balances. I'm using BlockFi, which pays up to 8.6% APY plus up to $250 on your initial deposit. In BlockFi, you can store a number of currencies and earn interest every month on your principal. And this, of course, compounds month by month. If you want to sign up to BlockFi, you can do so using the link down in the description. The second way to earn interest is by staking your crypto. And this applies to proof of stake cryptocurrencies such as Cardano and the upcoming Ethereum 2.0. I'm using Binance to stake Cardano, and last time I checked, they had a 17% APY for staking your Cardano for 15 days. When it comes to BlockFi, you can withdraw your money anytime. However, when it comes to staking, your money is locked in. I have earning interest on and staking crypto at number 1 because I believe they have the highest chance of multiplying your gains over time. You can find my price predictions for Bitcoin and Ethereum here and down in the description, and you can see why that is. A 5% APY on an investment that will 10x over the coming 5 years is a pretty good deal to me. If you enjoyed today's video, please hit the like and subscribe button, as once again this helps me immensely with the YouTube algorithm. Let me know down in the comments which of these passive investments you're putting your money in, and let me know if you have any comments or questions about any of them. Until we meet again, don't stop investing. Cheers.